Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for Monday, the 11th of February, 2019, about 3:40 p.m. Central Standard Time. Well, as you can see, it's a pretty mixed bag today in the stock market. You got the NASDAQ and the Dow down. You've got the S&P up and the Russell up on the day. It's one of these hard to figure out times. We do not have yet, at least as I'm recording this, I know of nothing that they've settled anything on the budget. Don't know if the government is going to stay open beyond Friday. Have no idea where they're at. I just know if you watched today in the news, you see that they're still talking, but they have not reached agreements. We'll see where that goes. Then, of course, the elephant in the room is the Chinese trade deal. We know that. The third animal that could be walking in, a rhino, is world economies slowing down, and that's had an impact. You had the lunar holiday end, but today in Japan they had a holiday. Somebody put a big order in last night in the Swiss franc, drove it what we call one of these mini crashes like they did in the yen the other day, and they do this at weird times. Why people don't understand that at 1, 2 in the morning American time, you don't have a lot of traders doing anything, especially when you get another big FX market like Japan's being closed and they try to maneuver after the lunar holiday. That maneuver lasted about a minute or two, but it's an annoyance, you know, so you watch what that does, and traders have shrugged it off very quickly. It wasn't anything to do, we think, with central banks. So let's go to the charts and see what we've got. For so far the week, we're up 2 points. I don't know that that's settlement, but we're in the last 20 minutes. You still haven't taken out important highs back here. You've stretched the market to the upside. You can see that right through here, we're spinning our wheels in the past week. But we spun our wheels very similarly right here. This was also that spin the wheel time. We've gone to a higher level, and we're doing that. Now, I'm sure that if we woke up in the morning and we heard there's a breakthrough in the Chinese deal, which I don't expect we'd hear, you could hear that Thursday or Friday when our bigger negotiators, the big boys, get there and they meet with China at a different level and they can make decisions. That could be a surprise. But what if there is no deal? Well, is this market priced that in? Don't know. This is a heck of a rally since Christmas Eve, and this market went up rather dramatically. In terms of the swing lines, you are still in a pattern of higher lows and higher highs. Take the name off the chart. I think you'd agree that until you break through this low here of the 2600, I believe this, let's just get the exact number, 2680.75, the market is still looking good. Now, if you went through that number and didn't take out 2737.75, you'd have lower highs, then potentially lower lows. Where's the support in this market? It's right under the market here at the 2675.5 zone, the 18-day average. But to get there, the problem is this. You'd break this pattern. Where else is the battleground? Look at the green line, the 100-day moving average of closes. That's one of the resistance zones. And then you've got the 200-day up here in the Bollinger Band. See, the Bollinger Band is right here, and this line going this way is the 200. So we have resistance above us in several areas, support right below us, and momentum is breaking down. Momentum often leads price. As of the close today, we will, I believe, have lost the bullish momentum. Now, did we lose it on Friday? If we take a look, you had a 79 reading on Friday. Today, you're under that. You cannot re-embed. That means the market at a minimum for the next 3 days, a minimum, even if it took off to the upside, is going to be oversold at best. Got it? That's always important to understand, and that often leads to price wanting to make a run to the 18-day average of closes. In the NASDAQ, take a look at the momentum. You lost the embedded reading here and you lost it on Friday. That often leads to price in the 18-day average wanting to come back together. In this market as well, if you went down to that 18-day average, at least as of tonight, you'd break through the last break low, so you'd turn the pattern to lower highs, lower lows to get there. In the Dow Jones, you lost the embedded reading today. You did not lose it on Friday. You can get this one back tomorrow, but it's got to be in very short order. The other thing that's been happening, I think we saw that Friday, and you saw a certain degree of it today. You get late day buying each day, and that's been rescuing these markets. But look where you're fighting in this market. You're fighting in the green line, which is the 100-day average. The Bollinger Band, no, I'm sorry, I said that wrong. The 200-day average is right here. That's this gray dash line. Bollinger Band way up there and here. So what do I think of the chart? I think the market is asking for a correction. I don't know that it'll last, but that's what the chart action seems to be saying, loss of upside momentum. The Russell has not done that. The Russell still has its embedded reading. It still has the pattern of higher lows, higher highs. It is fighting at the 100-day average of closes. Should it wanted to get back to the 18-day average at 1488.42, I don't know if that number is going to be. This was the last break low at 1492, so I don't know how much it's going to jump tonight. That number is moving about 4 points a day, as you can see it in the red there. It might be right at that number is what I'm trying to show you. In the VIX, you still have the bearish embedded reading. So the rallies here are still being sold from the looks of things, lower highs, lower lows. I do think the pros back here were writing puts and coming out at the 18-day average. That's been something that I've been telling you, I've been suspecting for a long time. And that's not just there. It's every time it seems to get to extremes, it's doing that. In the bond market, you're overbought, you hit objectives on Thursday and Friday, and you're backing off a little bit from it right now. Yes, the trend is up, but you're in an overbought market that is caught in this sideways action temporarily of the Bollinger Bands. The same thing of the 10-year notes. You can see where that is and how the market's backing off. The 5-year did the same, by the way. In TLT, the popular ETF, you have a lower low, higher high. You hit an upper target on Thursday and Friday, and you're backing into the Bollinger Band, and you are overbought. We then get to the dollar index, which has reigned supreme through this rally here since the beginning of the month. I mean, it's been on a tear to the upside. That tear is not going to help our trade. You know, it's going to do certain things to us that makes American goods more expensive. We are up and over the upper Bollinger Band, and each time we've recently done that on this chart, as you can see, and stayed over it, we've broken back under that in short order. Wouldn't be surprised to see that again. The flip-flop of that is the eurocurrency closing under its lower Bollinger Band. And yes, this is a market down to 113.08. This is a big break in that currency, probably something that they welcome because it will help trade, world trade, as their currency is a bit lower. In the British pound, nobody knows what's going to happen. Tomorrow is the House of Commons meeting. They keep having meetings. Ms. May tries to move them through, but the trend is down. If you threw the name off the chart, the trend is down, coming into important support right now. It's not 100 points away. It's 30 points away, and you're oversold. In the Japanese yen, fell down to the lower Bollinger Band today. Now remember, the market came back, and we're looking at the market, but the Japanese markets were closed today. I think it's called Reflection Day that they have a national holiday. Lower highs, lower lows. The market, what about momentum on Friday? Both numbers were under 20. Thursday, both under 20 the day before. So we have an embedded reading at work, and what the market did today, it went down for a profit objective of the lower Bollinger Band. That doesn't mean it can't go lower, but I do think the pros were taking money off the table, and that doesn't mean they won't resell the market. Here's the interesting thing in the yen. We're not seeing a run to it the way that we did before when this market went this way off of Chinese trade and worries about world economies and the like. Very interesting how it's changed its gear. In Bitcoin, when you lost the embedded reading right through here, market got back up last week to the upper Bollinger Band and backed off from that today. You're out of the downtrend. I don't see a trend. I see a lower and low, higher high on this. In the energies, the WTI versus the Brent. Well, we know that in the Brent, the Saudis and other OPEC members are, one way or the other, cutting production in a big way. Russia says they're joining. So that widened out the premium of it to the WTI. When we take a look at Brent, though, on the chart, I want you to look at how narrow this Bollinger Band is. This is what trends develop from. You're now winding up price action. Look at how stable this has been and sideways, and you've taken volatility out of the market. How often do you know volatility to come out of crude oil? Not very often. The trend at this point, lower highs, lower lows. The settlement was under the 18-day average. Therefore, the bears have control of it in the swing line. They have control of it in the bias, and momentum is pointing down. You'd have to get back over 62.90 to break that, and if it does fall, the lower Bollinger Band's a potential for the market. In WTI crude, what can I say? You went down to it already. You hit that lower Bollinger Band. You got to 51.23. The Bollinger Band was 51.63. My contention is the pros were taking money off the table, and you came back and said, well, the last trade's 52.41. So you're up and off that low by almost $1. In taking a look now at Rebob, stuck at the 18-day average. Look at how narrow all these Bollinger Bands are. This is what trends come from and where they develop. Nat gas today got high enough over 272. It got to 274.40 to finally end this leg of the break in terms of the swing line. The problem is momentum has not turned up. You need to lose that red line over 20 for that. So any rallies right now, even though you've lost the swing line, are probably still going to be viewed by the bears as selling opportunities. Would not surprise me on that. Come this week, and I'm talking, what day are we going to do this on? I'm thinking Thursday. Come this Thursday, I'm going to hold my live webinar. Today, of course, we are looking at February 11th, so this is the 14th that we're going to do that. As you take a look, we're going to hold it at 12:30 p.m. Central Standard Time. The invites have been sent out. If you haven't got one, it's simple to get one. How you get it, and you can't go on the website to sign up. It's got to be done through the invite itself. Just call us at this number. My staff will send it out to you. But we do record. We go live at 12:30. It typically lasts 30 minutes or so. Remember, that's Central Standard Time. You can join in from anywhere in the world. And the reason is I talk through my mic and you're writing back. So you don't need to dial in or anything of that nature. It's pretty simple. Bring your questions. We're going to talk about China, what these charts look like, and where these markets might go. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow.